Vayalil Capital. So today's topic is about the ICICI Prudential Equity and Debit Fund. It was launched on November 3rd, 1999. ICICI Prudential Equity and Debit Fund is an aggressive hybrid scheme investing predominantly in equity and equity-related instruments. The scheme aims to generate the long-term capital appreciation and accrued income from a portfolio that is invested in equity and debit. Why ICICI Prudential Equity and Debit Fund? The scheme is suitable for investors who seek the diversification across the debit and equity with an aim to benefit from accrual income as well as the long-term capital growth. The investors who wish to participate in the growth story of the equity markets with a portion of their portfolio invested in fixed income securities could consider investing in the scheme for a period of 3 years and above. What are the scheme highlights? The scheme's equity exposure ranges between 65% to 80% and debit exposure ranges between 20% to 35%. The investors across the market capitalization and sectors agnostic in its investment approach and takes exposure in well-researched. The equity. The scheme shall invest across the market capitalization while the large cap stocks represent established enterprises selected from the top 100 stocks by market capitalization. The mid and the small caps represent business entities with higher growth potential over the long term. The allocation will depend on the net equity level of the scheme as per the in-house price to book the model. As on February 28, 2019, the exposure to large, mid and small cap stock is 87%, 8% and 5% respectively. The scheme shall use a blend of top-down and bottom-up approach for the stock selection. The scheme shall remain sector agnostic in its investment approach. For stock picking, the fund manager shall identify those stocks with long-term growth prospects but currently trading at modest to relative valuations. The scheme may also take derivatives, exposure for portfolio hedging or an other permitted strategy with a view to minimize downside risk. As on February 28, 2019, the net equity exposure of the scheme stands at 71%. The debit. The scheme intends to tactically allocate to duration fixed income securities with credit rating AA and above, which offer reasonable accrual. The scheme shall take exposure in well-researched cooperative securities to earn a reasonable carry over wealth. The scheme also invests in fixed income securities issued by the government, quasi-government agencies and corporate and multi-lateral agencies. The debit exposure as on February 28, 2019 stands at 25%. Within the debit holdings, the scheme has a higher exposure towards good credit quality instruments to benefit from higher carry. The Indian equities ended a very volatile month of February down 1.1% from the previous month on account of the interim budget, a pre-emptive military strike by India, slow recovery in earnings growth over the last 2 quarters, buzz around general elections and receding the tensions between the US and China. The market sentiment remained nervous through the month and expected in the run-up to the general elections to be held in April-May this year. Foreign flows were volatile through the month with heavy selling seen during the military standoff between India and Pakistan. Foreign portfolio investors were net buyers of equity at Rs 17,222 crore in February 2019. Even though the earnings for Q3 FY19 were in line with expectations, earnings growth is expected to pick up going forward. The recovery could be primarily led by some of the leading names in the banking sector, shedding some of the NPA baggage, pharma companies benefiting from revival in US generic revenues, and relatively strong growth in companies of the consumption sector. Globally, the markets remain watchful of the US Federal Reserve stance to pause the rate hikes for now and signal flexibility in the rate hike process. We maintain our neutral stance and would like to remain nimble-footed at this juncture as the valuations look completely priced in and lots of macro plus political noise is expected over the next few months. We continue to believe that we are in the accumulation phase of investing. We recommend the investors to invest in asset allocation schemes that benefit from the volatility. So I am winding up today's topic. That's all for today. If you people are having any doubt, you can easily comment in our comment box. So as same always, please don't forget to subscribe our channel and also don't forget to share it with your friends and relatives. Stay home, stay safe and stay healthy. Thank you.